Hello everyone, today we're going to be discussing 7 insane things you probably didn't know about the one and only Warren Buffett. So, Warren Buffett is widely considered as one of the most successful investors of all time with a net worth of over $100 billion. But despite his fame and fortune, there's still some things that most people don't know about him. Okay, but before we begin, do subscribe to our channel and give us a like for the videos. In return, I will share with you a financial meme. Okay, so with that, let's go to the first insane thing you probably didn't know about Warren Buffett. And it is about his first stock investment at the age of only 11 years old, when he was just a young kid. Okay, so Warren Buffett was 11 years old when he purchased stocks of his own for the very first time. He selected 3 shares of Cities Service Preferred, which were priced at around $38 each. The stock went down to $27 per share, which had him alarmed. However, he held his ground based on what he understood about the company, and he was rewarded. He sold his shares at around $40, making a total profit of $6. He was proud of this until the stock eventually rose to almost $200 per share, 5 times that of what he sold. Alright, so Warren Buffett later said that the lesson was one that he applied for the rest of his life. The importance of patience in making investment decisions. Second thing, Warren Buffett started his early days with the deep value investing strategy, influenced by his mentor Benjamin Graham, also known as the father of value investing. You see, Graham himself was shaped by the Great Depression in 1929, where he lost a lot of money during that period of time. Hence, he adopted this so-called Seeger-butt investing methodology and only buy statistically cheap stocks in terms of either price to earnings or price to book ratio. Right? In Warren Buffett's words, this approach is where you try to find a really pathetic company, but it is trading so cheaply that you think that there is one good path left in it. Okay, so although the company might be ugly and soggy, the bargain purchase would make the path all free. And more importantly, this methodology gave Warren Buffett the historically highest returns when he started off with his own personal Buffett partnerships. The third insane thing is how he have achieved incredible returns during the period from year 1957 to 1969. You can see how Warren Buffett, their Buffett partnerships absolutely crushed the Dow Jones and even went above 40% returns in a few years. By 1969, 100,000 invested in the Buffett partnership would have become 1.7 million by 1957. And if you were to only invest the same amount in the Dow Jones, it will grow to only $252,000. That means that is a staggering, I think, almost 7 to 8 times difference. And that's really amazing. So this brings us to point number 4, the purchase of Berkshire Hathaway in 1965. So a lot of people think that the purchase of Berkshire Hathaway is the first stepping stone of his billionaire empire. But Warren Buffett said that it was actually a mistake. In a 2010 interview on CNBC, he explained that he first invested in Berkshire Hathaway when it was a failing textile company. He thought he would make a profit when more mills closed, so he loaded up on the stock. However, the firm started to think otherwise and tried to cheat him out of more money by pretending that they will do a takeover. A furious Warren Buffett eventually took control of the company and fired the manager. So he estimated that his so-called revenge move cost him $200 billion worth in today's value. And talking about mistakes, Warren Buffett has made plenty of them during his investing career. Another significant one is that of Kraft Heinz, which brings us to point number 5. So he actually overpaid for Kraft Heinz, this so-called food producer that encompasses a lot of famous brands, spanning from Heinz ketchup to Kraft macaroni and cheese. All right, Berkshire Hathaway owns around 26% of its stock holdings as of end 2022. But in 2013, okay, back where it started, Buffett partnered with 3G Capital to buy Heinz for around $23 billion. And in 2015, he engineered a merger with Kraft Foods to form Kraft Heinz, introducing its stock at $71 per share. That said, 7 years later, the stock trades at around $39, a 45% discount from that initial price due to various reasons such as a $15.4 billion write-down of intangibles in 2019, a change in consumer tastes away from packaged goods, as well as accounting irregularities. Although Warren Buffett admits that he has paid too much for Kraft Heinz initially, the stock is still within the top 10 positions in Berkshire Hathaway. The Oracle's patience seems to have paid off recently, as the stock has recovered 33% since the new CEO Miguel Patricio took over and implemented changes in June 2019. Next up, let's look at the personal side of Warren Buffett. So the point number 6 is the most valuable skill. Many of us have heard of priceless life and investing experience or advice from Warren Buffett over the years. But out of all these investment choices you can make over a lifetime, which one does Buffett consider to be the best? It may not be what you think. In fact, it may not be even a blip on your radar. And this most valuable skill, okay, that is shared is to work on your public speaking and persuasion skills. Here's what he has to say after taking a $100 Dale Carnegie public speaking course back then. This course gave me the most important degree I have. It's certainly the biggest impact in terms of my subsequent success. Whatever you do, good communication skills are incredibly important and something that almost anybody can improve upon, both in writing and speaking. Simply, Buffett is emphasizing how the dividends on the public speaking investment will pay off for the rest of your career. And on to our last point, giving back to society. Again, the Oracle of Omaha is regarded as one of the most generous philanthropists in the world, with lifetime giving topping $25 billion already. However, not many of them will have watched a HBO documentary about him titled Becoming Warren Buffett, and also realized that it was his late wife, Susan Thompson, who have influenced him in a big way. So Susan actually chose to dedicate her time and money to charity, while Warren Buffett continued working and growing his fortune over the decades. All right. But after a battle with cancer, Susan passed away from a stroke in 2004, unfortunately. And then in 2006, 2 years after Susan's death, okay, Warren Buffett actually ramped up his giving and promised to gradually donate all of his Berkshire Hathaway stock to philanthropy. Okay, so there you have it. 7 insane things you probably didn't know about Warren Buffett. What we think is that, okay, ultimately, he's also human like the rest of us. When you think about how he made huge mistakes, getting emotional during investing, and also needed to upskill himself on public speaking. All right, but these are only just a few things that make him such an interesting and inspiring figure. Are you interested in more of such videos? Do subscribe to my channel and hit the notification bell. Next up, if you want to check out 5 undervalued tech stocks, make sure you watch this video over here. Alright, So I will see you next time. Thanks for watching and ciao.